good evening, everybody. Thank you very much for joining us this evening in another weekly Wednesday webinar. We're so happy to have each one of you here with us. As usual, this is your MC, if you want to call it now, for the weekly Wednesday webinars, Eddie Villanueva. We're going to give a couple more minutes for other people to join, but we're so happy once again that you're here with us. And as we usually say, we understand that people have busy lives. We understand that this might be after work for you all, but you have taken the time to spend 1 hour of your Wednesday with us. So thank you very much for that. And we're going to learn a great topic, which is elevate your equity, how to, increase the value of your home. And once again, like I said, we're going to give a couple more minutes before we start the introductions. And we are so happy to see each one of you. And as usual, we see familiar names on the attendees. Mr. Joel Mears, thank you very much for being here with us. You're a regular in each Wednesday evening, so thank you very much. And as usual, don't forget that if you have any questions during the presentation, please make sure you send them through the chat or using the Q&A feature. And what's our commitment, Milton? Remind us, what is our commitment with our questions?
We will not go home until we answer every question. That is the commitment that we established from day one, and it is still very much alive. So thank you, Eddie.
Yes, so we're going to read every question live. So if you think that we're ignoring your question or we haven't read it, don't worry. We're going to read it live because we want to make sure that you take advantage of that great panelist team that we have this evening. You might see new faces, names that you haven't seen before, but this is people that care about your finances, just like the regular panelist team does as well. So, Mr. Ken, we see you in the attendance as well. Thank you very much for being here with us in another weekly Wednesday webinar. Milton, with that being said, I think it's safe to do the intro, so please take it away, sir.
All right, Eddie, thank you so much. And again, good evening, everyone. Welcome to another exciting weekly Wednesday webinar here with your friends at the United States Senate Federal Credit Union. It's a beautiful day here in the DC area. Man, lovely weather. It's been in the low 60s. Perfect for me. In my opinion, this is perfect. It's a in essence, it's a pure definition of a spring day. So exciting. Unfortunately, I know pollen is a little high. So for those people that suffer from pollen allergies, I know I'm with you. Make sure you stock up on those allergy pills, and you'll get through it. Just a couple of more months, and you'll be all right. You'll be enjoying the summer very soon. But with that being said, as Eddie alluded to, we have an exciting webinar here for you this evening. A lot of new faces. We are excited because we do have an amazing team today. What I call the true definition of actual experts with so many years of combined experience in the real estate side of things. So again, thank you for making time and coming on board and learning more with us here at the U.S. Senate Federal Credit Union. So with that being said, let me go ahead and start introducing our regular panel, the faces that you're familiar with, the ones you see every Wednesday. You already heard his voice, Eddie Villanueva from our marketing department. He's going to be keeping track of the chat and the Q&A. Along with Eddie, we also have Andrea Londono from marketing as well too, and she will be reading the questions. And as Eddie mentioned, it is our commitment that we will answer every question before we let you go this evening. So again, do not be shy. Submit all your questions. And if we don't have an answer for you today, we will get it to you as soon as possible. That's something that we also do and we live by. Right, Mr. Mears? I know he can attest to that. So and with that being said, we also have our very own, our amazing, the person in charge of all this beautiful graphics that you see here in this presentation, Carrie Lazar. Thank you, Carrie. I don't know what's happening, but there's something in the water because these graphics are getting better and better every single Wednesday. So Carrie, thank you so much. And with that, let me start moving on for the main panel for this evening. Before I introduce the presenters, I want to give a special shout out because she's also with us here this evening. Our VP of Lending, Angie Collier, so she's with us. Thank you, Angie. Along Angie, we also have our Director of Real Estate Lending, Kelly Pasilio, who are also going to be sticking around to the end of the presentation. So if anyone has any questions, she will also is going to be answering some of the questions that that are going to be coming through. And with that being said, the main presenter for this evening is our very own Sharon McDonald. She's our home equity loan manager. She's going to be leading this presentation for us. Very exciting. And along with Sharon, we also have a real estate expert. This guy, he's been in the real estate industry now for 17 years. He's actually the president and principal broker of Potomac River Realtors. So much, he has so much experience in this industry. And I mean, he is the true definition of a real estate expert. So Phil Sefarati, thank you so much for being with us. And with that being said, I think it's time for me to pass it on to Sharon. So Sharon, go ahead and take it away from me.
Thank you, Milton. And thanks everybody for, as Addie said, spending an hour of your time this evening to get familiar with our home equity products, as well as identifying a return on investment opportunities with your upgrades to your property. The discussion points for this evening will be understanding the home equity, exploring financing options, navigating the financing process, as well as identifying the high return on investment home upgrades. Next slide, please. So with understanding the home equity, your home equity is the difference between your home value and your first mortgage balance. So that difference is what you have available in equity. So a scenario is if your home is valued at $300,000 and maybe your first mortgage is right around $200,000. If you're looking at 100% of your available equity, it'll be $100,000. The value of your home can be determined with either an online evaluation, or if you have a recent appraisal done on your property, that will be a way of determining your equity that you have in your home. The value of building home equity is, of course, that equity increases your net worth. It offers financial security and potential for future borrowing. If you wanted to have more options as far as borrowing, you can always look into the home equity that may have a lower interest rate as opposed to an unsecured loan. As far as factors affecting your equity in your home, of course, the market definitely determines your equity. It goes up and down depending on the availability of homes. With a little availability, you may see a higher value to your home as opposed to times when there's plenty of homes on the market. You may see a decrease or a stable value to your home. So those are things that factors that affect your equity. Of course, the improvements that you make on your home can also affect your equity. And of course, making your monthly payments. As your loan balance go down, the available equity is impacted. As far as financing options go, we have a home equity loan, which is a fixed rate closed-end installment type loan, pretty much like an auto loan or a personal loan. We fund the full amount and you start repaying on that amount at the first due date. This loan has a fixed rate, a fixed term, and a fixed payment amount. So members that are not comfortable with a variable interest rate may lean towards the home equity loan. We also have the home equity line of credit, which is a line of credit that's secured against your home. It works much like a credit card, has a variable interest rate that's tied to the market. And for United States, excuse me, for United States Senate Federal Credit Union, we have two options for the home equity line of credit. And we'll go into more details on the options that we have for this particular loan product as the slides continue. We also have the Home Improvement Plus loan. It's pretty unique loan. It's also secured against your home, and it's valuable to those members that have little equity in their property, because this particular loan allows us to go above 100% loan to value. So it goes up to 110% loan to value. And it also allows us to secure a lien in third position. So if you have an existing first and second, a home improvement loan may be an option if you don't want to have to pay off your two existing loans. Or again, if you have limited equity in your home, the Home Improvement Plus loan may be an option for you for home improvement projects. The other unique thing about this home improvement loan, it has a limited, it only goes up to $70,000, and the purpose for the loan has to be for home improvements. You wouldn't be able to use it for any other options. And of course, with United States Senate Federal Credit Union, we have credit cards available. Other financing options is cash refinance with the first mortgage team. Other options that members choose to use for financing is pulling from their retirement accounts or investment accounts. And of course, we have personal loans. So next slide, please. With our home equity loan, which is the fixed rate closed-end installment type loan, the pros on this particular loan is it's a fixed interest rate, it's a fixed payment amount, and it's a fixed term. So you don't have to worry about the interest rate or the payments going up during the term of this loan. It's also funded as a lump sum. So if you're approved for $20,000, we fund the $20,000 and you start paying that balance down based on that structured payment. There's also potential for tax benefits on the interest. Of course, you would have to reference your tax advisor to find out if the tax benefit is beneficial for you in your situation. The cons of this loan is, of course, as with any home equity loan, you're using your home as collateral. We have closing costs, fees associated with this loan, and it's a fixed amount. So it's a fixed amount. You know, it's not like a line of credit where you can use it periodically. It's fixed. But as much as it is a con, it's also a benefit to our members, because that's what some of the members are looking for: a fixed amount, fixed interest rate, and they don't have to worry about the fluctuation of interest rates or payments. Next slide, please. This fixed rate home equity loan, as with all of our loans goes, we can finance up to $500,000 on this loan, but this is just a screenshot from our interest rate. This loan, the interest rate varies according to the term that you're looking for, as well as the loan to value. So this is just a screenshot to kind of give you an idea of the various rates based on the loan to value. Our home equity lines of credits, as I mentioned, we have two lines of credits, but we'll just talk about the home equity lines of credit, or HELOCs in general. The pros, of course, with the line of credit is the flexibility of borrowing. You can be approved up to an example, if you're approved up to 100,000, you have the flexibility of using that line of credit for the term of 10 years during the draw period. The lines of credit are, all of our lines of credit are 20-year terms with a 10-year draw period. And what that means is you have 10 years to use that available line. Once that draw period expire, you go into a repay period where you're just repaying the balance. So the availability to use it is no longer available to you, but you'll just be repaying the loan. But that's with both of our HELOC loans. They're 20-year terms with a 10-year draw period. With both of our loans as well, with both of the HELOC loans, they are both variable interest rate, prime plus 0. We do look at the Wall Street Journal prime rate to determine our rate for the quarter. So those rates could potentially adjust quarterly depending on the Wall Street Journal prime rate. One of the HELOC loans do have the option of interest-only required payment. However, you can always make additional payments on any of our home equity products without penalty to save on interest. This one as well has the potential for the tax benefit if you, of course, would have to conference with your tax advisor to determine if that's applicable to you. The cons on the HELOC is the variable interest rate, the risk of overspending, having this line of credit available. You could potentially make impulse decisions because you have it available. So just be mindful of that. Of course, with all the home equities loans that we offer, they're secured against your home. And with the line of credit, the draw period ends, and we wouldn't be able to modify that once your draw period ends. If you decide you wanted to have it available again, you would have to reapply for a new home equity line of credit, and it will be based on qualifying factors at the time of the application. But I'm sorry, Carrie, no, you can continue. I can speak on, this is a perfect slide for it. The Smart Line home equity line of credit is our more traditional line of credit. And by that, we pay, your payment is principal and interest payment. So when we calculate your required payment on the Smart Line, you'll see part of the payment go to satisfy the interest, and a part of your payment go towards the principal loan balance, should you have one. The interest rate, as you can see on both lines, is prime plus 0, currently 8.5%. The Classic is quite unique. Line of credit is our interest-only required payment. However, with this loan and all of our home equity loans, you can make additional payments to pay towards the principal, but the required payment is interest only on the Classic. The Home Improvement Plus loan, this is the one that allows you to finance above 100% of your available equity, up to 110% to be exact. 70,000 is the max limit on this. The interest rate is fixed based on your qualifying rate. And it says quick funding, but basically for all of our home equity loans, we're able to generally close on those loans within 30 days or less. So we have it on this slide, but it's really applicable across the board. There are times when the funding may take a little longer, but that can be based on getting the required documentation that we need in order to move the application along. It can also be if we have to have a full appraisal, and once we schedule the appraisal, we have to wait for that to come in, so that can prolong it a little bit beyond 30 days, or if a title issue should come up, and it takes some time to get it resolved. But for the most part, all of our loans, including the Home Improvement Plus, we're able to finalize in 30 days. The cons on the Home Improvement Plus, because of the it being secured at a higher loan to value, is the interest rate is a little bit higher. It's a shorter repayment term, and the loan is capped at $70,000. This is a screenshot from our website, and it shows the as low as interest rate. Of course, we wouldn't know what your qualifying rate is until we pull the application, but it also gives you the terms, the max loan amount, and the payment examples. And I think it's based on 70,000. But this information is on our website. Navigating the financing process. That would be applying for the loan, understanding the approval process, and managing disbursements and repayment. So it's good to, when you're thinking about a home equity loan or applying for the home equity loan, to prepare. Some of the things that we will need from the borrowers will be proof. You would have to, of course, be a member of the credit union in order to apply for any of the home equity products. For proof of income, if you have wage income, that will be their 2 most recent pay statements. If you have benefits income from Social Security, we would just need the income statement. If you're self-employed, we would need 2 years tax returns. In some cases, we need the profit and loss statement. And we may require 3 to 6 months of your bank statement. So we do have to verify income. We're not able to, if you're one of those members that have a direct deposit to the credit union, we're not able to consider the direct deposit. So we really have to collect the proof of income. We would also need proof of home ownership, which would be just a copy of your mortgage statement. As far as home value goes, we, on all applications, pull an online evaluation report to determine the value of your home. And in most cases, if the loan amount is $250,000 or less, and it shows sufficient equity, we're able to move the application along just using that online evaluation. If the loan amount is above $250,000, we automatically need a full appraisal, and we would give the member an option if they want to move forward with a loan pending the outcome of the full appraisal. For project details, that would be more applicable. Well, we do need a purpose on all of the home equity loans, but as far as project details, that's more applicable to the home improvement loan. Because it's strictly for home improvements, we will need a copy of the contract for the home improvement, or the invoice of work that's being done, or the estimate for the work that's being done on the home improvement project. So that particular loan needs that kind of information because it's strictly for home improvements. As far as information on credit and debt and liabilities, we will pull a credit report to look at the credit worthiness of the application, the outstanding liabilities, to determine your debt to income ratio. So it's not just your available equity that we look at to determine your qualifying factors. We do review the credit report and your repayment history with other lenders. Understanding your approval for the HELOC and the fixed rate loans, installment loans, those rates are not determined by your credit score. It's a rate that's determined, the HELOC is prime plus 0 regardless of credit score. It's only the HIP loan that is risk-based price based on your credit score. Your credit score will determine the one of your rate that you qualify for. As far as income and employment history, we do like to see 2 years of employment history. So if you have changed employment, we would need to, within a year, we would need to gather that information from you. The debt to income ratio, we look at your outstanding liabilities as a your outstanding monthly payment on your liabilities and your monthly payment to determine your debt to income ratio. For the home value and the equity, as I stated at the beginning, we look at the property value minus your first mortgage if you have an existing first mortgage to determine the available equity. For a United States Senate Federal Credit Union, we finance up to 90% loan to value. So to get an understanding of what that is, we take your property value, multiply that by 90%, and then we subtract your first mortgage balance from that figure, and that will tell us your available equity at 90%. So we do 90% up to 400,000 and 80% from 400,000 up to 500,000 on our HELOC, on both of our HELOCs and our fixed rate installment loan. We do, if the members share that there is a cash reserves, is good to know in the event there's a debt to income ratio, and we may want to, just know that that's there in the event that becomes a mitigating factor when we're reviewing the loan application. We also like to know if you have other properties, so that we can look at that as well to determine, your full portfolio when we're making that final loan decision. And we always need to know what the funds are being used for. It can't be just general statement of just need the cash. We really have to get specific as to what the loans is being requested for and be immediate. Even like with the HELOC, it's a 20-year term. Maybe during the course of the 10 years that the line is open, you're using it for various reasons, but the initial reason for the loan requests need to be provided. The interest rate, the board sets our interest rate on our fixed rate loans. Like I said, with the HELOC, is determined by the Wall Street Journal prime rate. And the board also looks at the interest rates on the home improvement. Next slide, please. Managing disbursement and repayment is just an important, none of our home equity loans have a prepayment penalty. So it's important to make those scheduled payments, and the members have the option to make additional payments to save on interest on any of the HELOC loans. Specifically the Classic, which only have a required payment for the life of the loan as just the outstanding interest. Both of our HELOC loans have a balloon payment at the end of the 20-year maturity date. So if you're not making additional payments on those loans, then you can wind up with a significant balloon payment at the end of the 20-year term. So it's just important that you're aware of that. We have really skilled processors that will guide you through the process and inform you, but it's good to just, ask questions and read your disclosures and when you're applying for the loan, so that you're fully aware of the loan product that you're getting, to ensure that, at the end of the term, or if you decide to pay off, you don't have a shock by, your balance not going down, and specifically for the classic, if you only pay the required interest only payment. Of course, prioritizing the high return on investment projects, probably looking at those projects that will add value and equity to your home initially, as opposed to just those renovations that just make your home comfortable. Using the funds wisely is important as well. A lot of times our members will look for the fixed rate home equity loan, or even sometimes the HELOCs for debt consolidation. And if it's not a requirement that we pay those off, just make sure that you're using those funds to pay off those debts that you indicated you wanted to pay off, so that you're not subject to having a new home equity loan payment on top of those debts that never got paid off for whatever reason. So just use the funds wisely, establish an emergency fund when needed, because with the HELOC loans, like I said, the interest rates could potentially adjust, but they can adjust up and down. With the HELOCs, the floor on our HELOCs are 3%, and the ceiling is 18%. However, it is tied to the Wall Street Journal prime rate. Stick to your payment plan. Stick to your repayment plan, and with the fixed rate loans, there is a 15-day grace period on that. With our SmartLine HELOC, there's a 10-day grace period on making that payment without incurring a late fee. However, on the Classic, there isn't a grace period. So if you miss that payment due date, then you're subject to a late fee. So just be mindful of the repayment plan when you're taking out the home equity loans, and make sure you ask those questions to the processors. Our processors are really knowledgeable and patient with the members, and making sure that they fully understand the product that they're getting into. And like I said, pay more when possible. Our loans are simple interest, so if you make additional payment, you save for sure on interest rate. And of course, you have the option to refinance when it makes sense. And communicate to us when you're going through the process. Make sure you ask the questions once the loan is funded. And excuse me, you can always reach out to the home equity department at any part of the process and after. Sorry, guys. Next slide, please. Why use United States Senate Federal Credit Union? Well, we do lend in the home equity department nationwide, except for Texas. We have a wonderful vendor that provides the mobile notary to facilitate our closing, so we can have your closing set up at your office, at a library. Some members, we're getting towards the summer, and people are planning their vacations, and they may be in the middle of the home equity process, but not to worry. We can set up the notary to meet you at your vacation spot if you're not at the subject property address. So it's convenient. We also offer home equities, not only on the owner-occupied primary home, but we also offer home equities on your second and vacation homes. We do not offer home equities on investment properties. If you have an investment property that you want to do a refinance or get cash out, you would probably need to speak with one of our first mortgage loan officers for that. But the other perks of why use United States Senate Federal Credit Union, like I said, there's no prepayment penalty. You can apply online. You can give us a call. We can take your application over the phone, and we have professional friendly processors to help you from beginning to end. We have a few comments from the members that work with us in the past, and they have nothing but good things to say about their experience working with the home equity department here. Next slide, please. Another reason to use us, especially during this time, is that we have the closing cost promotion going on for the second quarter. It started the 1st of April. It goes through the end of June. So if you have a loan in process or funded during this time, we're offering up to $500 closing costs towards your closing costs. So this is pretty unique because it's not contingent upon anything except that you're processing the application with the credit union. So that's a really nice feature to save on closing costs. This is just a slide announcing a recent award that our First Mortgage team have, and it's on our website. It was provided by CUNA Credit Union Mortgage Association just recently, but we just wanted to share, make you all aware that, you know, for in regards to our First Mortgage team. So I think the next slide is Phil, who is our realtor, that will talk to you about the return on investment options.
Hi, everybody. Thanks so much for joining us this evening. It's my honor to have been invited by the credit union. I wanted to let you know that everybody's situation is different. So certainly return on investment is basically, I'm going to spend $10,000 to fix up my kitchen. What's that going to do when it comes to selling my place? Is it going to get me $15,000 extra, or is it only going to get me $5,000 extra? So is it going to cost me $5,000, or is it going to make me $5,000? Again, every situation is different. Every house is different. And so there are basically, talk to your realtor and see what the market really looks like for you and what's going to provide a benefit. So I've listed 3 houses in the past couple of weeks, and each house has done various levels of renovations. So one is my stepdaughter's condo that just went under contract this evening, and she lived in her condo and it needed a completely new kitchen. So new cabinets, new countertops, because they were basically probably 40 years old at least, and they were in really bad shape. So by virtue of spending just about, I think she spent probably $15,000 to do her kitchen as well as a few other things, she got a really good positive return. Another house, which was an estate sale, we went in and did some really basic stuff. We had the house painted, we refinished the floors, we brought in new appliances, didn't completely redo the kitchen, but just painted the cabinets, put in new appliances, didn't change the countertops even, and boom, because of the market, because of where that house is, got a really quick turnaround. We were on the market for 12 hours and got a contract well above list price. Very positive return. So what I would say to you is, I saw one question, I looked at one question that somebody posed earlier, that he's two spouses are discussing, should I do a chicken coop or should I renovate a kitchen? So that really depends on where you live. Are you in farmland? Are you really going to get a benefit? You want to look at, number one is return on investment also can apply to more than just dollars. Because if you're going to do your renovation, you're still going to live in your house, you're getting the benefit right there of having this nice new space either in your house, or you have, you know, the benefit of raising chickens and getting fresh eggs every morning. So you've got to figure out the value of that. But when it comes time to sell, and you're possibly, hopefully using a HELOC or something like that, so you're not putting it on a credit card, you're basically borrowing money from the bank at a lower interest rate than credit cards to spend on your renovations, and it sort of reduces the limitations and expands your opportunity to renovate. But as I was saying, when you're getting ready to sell and the renovations you want to do, you want to think of your house, your entire home, your entire property as a product. Think of it less of as your home, but more so this is something I'm going to sell to somebody, and or I'm going to sell to put it out in front of the marketplace. So you want to think of what's the broadest spectrum. I want to get as many people as possible interested in my home. So do I really want to put that dolphin fountain in my bathroom that I really like, but is really going to limit the number of people who are going to like my bathroom going forward? You want to do really the basic things. So what do people like? They like fresh kitchens. They like fresh bathrooms. They like neutral colors. You might like some wild sort of purple, lavender, dark black. I've seen black walls in bedrooms, and it's pretty interesting. And I would recommend lightening those walls just to provide space. And again, a greater number of people are going to like basically off-white walls or white walls or even gray walls as opposed to a black wall. So there are a lot of things. And again, there are also times, we're virtually in a time right now where there's such an demand outstrips supply by such a large amount. You can do work and you're going to get a benefit. But ultimately, when push comes to shove, you don't have to do things if you really don't want to. And that's what these, I'll buy your home right now, people are sort of pressing people on, saying, oh, I'll buy your house right now. Of course, it's going to be at a discount than what the market's going to pay you, even if you don't do any work. But that's what they're saying. So I would recommend still using a home equity line. You have the opportunity to use money in the short term. So you're not really losing money because you're going to turn around quickly. You're going to do your renovations, and then you're going to sell your house, and you're going to see that positive return. So again, when you're getting ready to sell your home, talk to your realtor, and they should be able to guide you. I would be more than happy to guide you, discussing these are projects that will actually get you a positive return. These will help you sell your house quickly for more money, and they're worthwhile doing. It's always your option to choose whether you want to do them or not. But again, think about that as, well, I don't like that. I don't want to do that color. I don't want to do that feature. Well, think about it again. Your home is become a product, and therefore this is something you want to make as shiny, as bright to the marketplace as possible. And what I would say again then is home equity lines are a great opportunity to get the money needed to do things, to prepare your house for sale. And again, even when you're living in your house, to make the house more comfortable for yourself. And again, think about yourself as, okay, I'm going to be here 20 years, so I can do whatever I want to my house as long as I like it. And I know that probably before I sell it, I'm probably going to have to do some stuff to it to get it so where the marketplace really likes it, as opposed to me really liking it. But again, lots of options, lots of opportunities, and a home equity line of credit is a great way to go to leverage return on investment for home renovations. And I think that's about it for me. So this is just an example, this second slide, just an example, again, of various things. We've already talked about bathrooms and kitchens. Curb appeal is very simple, very inexpensive for the most part, unless you're talking about taking down trees around power lines and that sort of thing. Energy efficient updates. They play a role to some extent. What I would say is, they talk about roofs. That's more about really function of the house than energy efficiency. And when it comes to things, if things in your house work, like the fundamental things in your house, hot water heaters, air conditionings, units, things like that, they work, especially in this market right now, don't worry about replacing them, because your house is going to sell regardless, as long as they're functional. And that's it for me.
Hey, thank you, Phil. That's a lot of information, a lot of great information. I'll say it also, Sharon. That's been wonderful. Thank you, thank you, thank you. Wow. This is in line with the season, right? I mean, we're talking about the spring season. This is the time where a lot of people want to do a lot of different home projects. So if you're one of those people and then you're debating as to what you want to do, give us a call. Give us a call, and if you're ready to submit an application, we'll be more than happy to do that. You can email us here directly. Carrie is going to send her contact information. She's going to send the presentation to everyone. So if anyone has any questions or concerns, please feel free to reach out to us directly, or you can go to our website. The website is ussfcu.org and /equity. And that's where you also will be submitting an application if you want to go ahead and apply. You can also write, Sharon, correct me if I'm wrong, but if you want to come and see us in person, we are located in the Bowman building. If you're in the Alexandria, DC, Maryland area, you can stop by our headquarters, or if you're in DC and want to stop by and say hello to our friends over at the Hart branch, you can also do that. So again, thank you all for a lot of great information. I have been seeing the chat going in and out. Andrea, Eddie, I think we do have multiple questions there. So let me pass it back to you also, so that we can have Sharon, Phil, Kelly, and Angie perhaps answer some of those questions that came through. So thank you all again.
Thank you. So the first question is there a minimum amount one can borrow with a home equity loan?
I
The
can
minimum,
answer. Oh, go
minimum
ahead.
is 70 oh, I'm sorry. Minimum is 7,500.
Thank you. And are there any restriction on the purpose for home equity loan? Does it need to be related to the primary resident?
Sharon, I can answer. It has to be your primary residence or your second home. It can't be an investment property. It can be a vacation property, but you can't be using it for investments. It has to be a true vacation home that you're not renting out partially. Purpose for line of credit. There would be some restrictions. I mean, if it's for investment business, that sort of thing, there are some restrictions, but home improvements, educational, credit card debt, most reasons are acceptable. But if you have any questions or if there's an issue or concern, by all means give us a call and we can talk to you about it.
Thank you so much. Another question is, my wife and I were willed a home which has a balance of $56K. So we're trying to decide on a home equity loan on our home line of credit or a traditional loan on the home.
I can answer that question. So that will ultimately be determined by the borrower. Of course, the line of credit has a variable interest rate if you're comfortable with that, and it's perfectly wonderful product, as Phil mentioned, for home improvements. Because if you have ongoing home improvement, you're only paying interest on the outstanding balance. So if you're approved for 100,000 and you only need maybe 10 or 15,000 initially, you're only going to pay interest on that outstanding balance. So, but you have it available for that 10-year draw period term to use as other home improvement projects come up. Also, if you paid off that 15,000 that you initially borrowed, we don't have a minimum balance fee. We don't have an annual fee. So if you have a zero balance on your home equity, it's not going to cost you anything. And like I said, you have that 10-year draw period to use it at your discretion for ongoing and upcoming home improvement projects or whatever you may need it for during that 10-year draw period.
Thank you so much, Sharon. Another one is, do you offer home improvement loans that aren't HELOCs?
HELOCs.
Thanks.
We do, we do. We have that fixed rate home product that I mentioned in the slide. It's a fixed rate installment type loan. So we fund the full amount and you're just repaying it. So it's a fixed rate, fixed term, fixed payment. So you don't have to worry with the interest rate adjusting on it. So it is a closed-end installment type fixed rate home equity loan.
You're on mute.
Thank you, Eddie. There's so many questions.
When they help with them, I can definitely, I see one of them on my end. And by the
Yeah.
way, Sarah, you did an amazing presentation. I think we're gonna have to invite you to do other topics with us because you might want to be part of this panelist team. You just feel right in, you know. And also, I just want to let everybody know that this topic touches home, no pun intended, because back in the day, I used to work with the home equity department. Angie and Kelly can tell you we were like the OG team back in the day. So you know, this is just bringing all these memories and potlucks we did. And well, the potlucks is another topic, right? But one of the questions I have on my end is, what is the prime rate as of right now?
So we determine the prime rate for the home equities quarterly. And so when we determined the rate for the current quarter, it was at 8.5%. So
All
that's
right.
where we are. Our rate on the HELOC is prime plus 0, currently at 8.5%.
All right. Another question for any one of the panelists. If you pay more than you owe on your home equity line of credit, does that extra go against your home loan balance?
Okay, are you're saying you're making more than the required monthly payment? Yes, but you really should, if you're gonna make more and you want to make sure and you want it to go to principal, you need to instruct us to do that. But yes, you can prepay.
As
Got
long
it.
as, you know, the member let us know what they want to do, we make it happen, correct, Kelly?
Well, yeah, as long as it's a minimum payment, as long as the minimum payment is met, yeah, we can do the rest to principal. You just need to call us, or if you're in the off, if you come into the branch, just to make sure that the person that's posting your payment understands that's what your intent is.
Got it. Hey, I actually have a question for Phil. So Phil, let's say I approach you and I'm thinking about putting my house in the market, but I'm not really sure yet because there are definitely a couple of things that I think might need to be repaired. And with that, I have that in the back of my head that that I have some time to make the final decision. But if I approach you and then you come and see my house, and then you obviously you notice that there's definitely some improvements that we need to make on that particular property. What would your advice be for someone if anyone is on that position? Would you recommend them, using their savings or perhaps taking advantage of the equity in order to make those improvements? What is your point of view on that particular topic, Phil?
My first point is always to say, what is that homeowner's situation? Where do they stand financially? So do they have a lot of cash in the bank? Are they highly leveraged? Do they have a lot of equity in their house already that they could then get a home equity loan for that? Do they want to do the renovations, that sort of thing? So it's very much a give and take of saying, well, this is what I would recommend to do to make, in a perfect world to do what you should do to your house. This is probably sort of the range that you're talking that it's going to cost to do these things. Select the ones you want to do, and obviously you have some sort of time. And then again, it's very much where do you have capacity to use money? I mean, I firmly believe, unless you have, there aren't lots and lots of people who have just wads of cash sitting in a checking account that's ready to go to be spent on renovations. A lot of people are using credit cards, that sort of thing. And I would say, once you get some equity in your house, take out whether a home equity loan or I have to be honest, I'm biased. I'm a big fan of HELOCs because again, it's a draw. You're not paying if you have $100,000 home equity line of credit and you haven't used anything, you're not paying any interest, but you have access to that cash, ready access, immediate access to that cash. And I mean, I think that's the easiest, most simple thing to do is to say, I've got this money available to me. I've already set everything up with the bank. And if I want to do renovations, whatever they may be, kitchen, bathroom, landscaping, a new deck, a new roof, that sort of thing, I've got that money sitting right there waiting for me and I have direct access to it.
Awesome. Thank you, Phil. That's a great insight in there. Thank you so much. And with that being said, Phil, so what if I wanna make an appointment with you? Again, I see you've been in this real estate market for 17 years. I'm sure you have a lot of knowledge and you know what's happening, especially in the DC area. So if I want to reach out to you, how can I get a hold of you, Phil?
Easiest way is, either email or text. You can go to my website, PotomacRiverRealtors.com. My phone number is 703-371-7601. My email address, the easiest email address to remember is phil@PotomacRiverRealtors.com. You can Google my name. I'm on Facebook. And all my contact info is basically everywhere online possible. So you should be able to find me. The most difficult thing, obviously, is figuring out how to spell my last name. But I'm out there and about. And one of the big reasons I got into real estate. So obviously, you look at my hair and realize that I haven't been out of college 17 years. I've been out a lot longer than that. So my career spans decades, and whether it was in the Navy as a Navy officer, contracting officer, and then getting my MBA and being in the corporate world doing corporate finance and business development and contracts. I got into real estate a lot because I'm very much in the service industry, and I believe that there's a gap for most people or many people who are dealing with realtors and dealing in the real estate world. And my job is to make sure that people are protected and guided well. And even if that means not doing business, but I'm happy to just talk to people and provide some advice.
Thank you, Phil. And one thing for sure, I mean, this is from a person that I also been in the banking industry for 17 years myself, and I have purchased 2 properties already. And then there's one thing for sure. If you are thinking about whether it's buying or selling, my first advice, obviously, it's come to us, talk to us if you want to buy or if you want to do any improvements, come in and talk to us and we'll take care of the lending part. But the next big piece and your biggest partner that you're going to need in the whole and the whole journey, what I like to call, is to make sure that you have a realtor that is going to be there with you, help you understand the whole process. There's so many different things out there that that you want to make sure that you are talking to the right person, somebody with the right experience, somebody with the knowledge in the market, as Phil was mentioning. That's the person that you want to have on your side, on your team, because right before we started this webinar, believe it or not, Phil was ratifying a couple of contracts, I believe, if I'm not mistaken, and that just is a true statement as to why we actually have Phil and why he is a realtor expert here for the credit union, because it's somebody that we truly see his craft, and it's somebody that you want to rely when you're going through the whole experience of again, either buying or selling. You definitely want to have the right person right next to you during the whole process. So again, Phil, thank you so much. I believe we have more questions there, Andrea, Eddie. And again, thank you all for all these questions. I haven't seen this many questions coming through in a couple of webinars, so this is exciting. So let me pass it back to you, Andrea.
Okay, so the next question is, for approval on a HELOC, does the credit union look at my current monthly income application? For example, for someone who is currently retired and receiving a fixed monthly pension lower than a regular employment income.
I'm sorry, can you repeat the question?
Yes. So for approval on a HELOC, does the credit union look at my current monthly income of the applicant? Sorry. For example, for someone who is currently retired and receiving a fixed monthly pension lower than a regular employment income?
Well, we're gonna look at your whatever your gross monthly income is, no matter where that source is, that's what we're gonna use. So as long as your gross monthly income and your debts aren't excessive and they fall within our guidelines, it should be okay. But yeah, if you're retired and you're using, you have a pension, Social Security, a combination, yeah, we have to consider that. Well, we will consider it. It's your income. As long as we can verify it, we use it with the debt ratio. The key is though, would you qualify, is your income, do you have enough income to qualify for the loan? And, when you apply for the loan and you talk to a loan processor or a loan officer, we can, help you with that and determine it pretty quickly.
Thank you so much. Next question is, so the prime rate is the absolute lowest that would be charged. Is it possible that one's actual interest rate depends on one's credit worthiness and could very well be much higher?
We only have one risk-based loan, and that's the Home Improvement Plus loan that Sharon talked about, where the maximum is 70,000 and it's strictly for home improvements. That is based on it's risk-based, and part of it is based on your credit score. Our other products are either it's the same rate for everybody. It's either the fixed rate, which is determined by our board of directors, or it's our line of credit, and that's the index on that is Wall Street Journal Prime.
Another question is, can you use a home equity line of credit to buy a second home?
Well, if there's yeah, it's possible. It's possible, but the thing about that though is, if that's a primary purpose, then we're going to need to know what the proposed payment is going to be on the new home you're buying. Is the equity going to be enough? Is the line of credit enough to pay for the full price of the house? If not, then we're going to need to know the terms, and you might not know that. So that could be tricky. It's not impossible, but it could be a little tricky if you don't have all the information.
Thank you so much. Another question is, are closing costs based on the amount of the loan or HELOC? And what are the closing costs generally?
Sharon, do you want to take that one?
Sure, certainly. Yeah, so the closing cost is going to vary not only based on the loan amount, but also the services that we have to use in order to qualify you for the loan. The recordation fees and taxes vary according to the state and county that the property is located in. So, for example, DC, the recordation fee is flat $156.50. However, if we're looking at a property in Montgomery County, if we're looking at a $100,000 loan in Montgomery County, Maryland, that fee could be closer to $1,500 to $2,000. So the closing cost is going to vary according to not only the loan amount, the recordation fees for the city, and well, the county and the state the property is located in. We also, the primary services that we have to use in order to qualify a borrower is the flood search fee, the title, the equity title report fee. If the loan amount is over 250,000, there's title insurance, and the online evaluation report, and of course, the full appraisal, if an appraisal is needed. So I know on our website, we have a range between 600 and I think 1,300. However, that is just a range, and it could go higher depending on the loan amount. So if your loan amount is, closer to 2, 3, 4, 500,000, you can expect that the closing cost fee is going to be quite a bit different than what is showing on the website as the range, because of the title insurance and the recordation fees for the state and county. So
Thank you so much. I think those are all the questions. Eddie, if I'm wrong, let me know. Oh, wait, no, there's
I have two more on my end, so
yeah.
please, I just wanted to say thank you, everybody. I know we went over the 7 o'clock mark, but these are very interesting and specific questions, and as you can see, we have been answering questions from chicken to home renovation. So we answer it all here at that weekly Wednesday webinar. With that being said, for anyone on the panelists, I missed the beginning. Did you say HELOCs, you only pay interest for the first 10 years? Is this true or false?
The draw period is 10 years. You pay interest for the life of the loan.
yeah.
All right, perfect. And the last but not least, how do you determine how much equity is in the home? Do I have to get an appraisal done? And I know that, certain factors, apply if they need an appraisal, if they can get something else. So if you can please elaborate, how can somebody know how much equity they have in their home?
Sharon, you want to take that one?
I can. In order for the credit union to determine how much equity, we have to have an application. And at the time of application, we pull an online evaluation report to determine the value of the property. If you're just wanting to kind of get an estimate, of course, you can look at your tax assessment. You can go on Zillow or Redfin and kind of get an idea of what that property value is. But if we have an application from you, we'll do an online evaluation report, regardless of the loan amount you're looking for, to give you and provide you with that report, and give you the option of, how you want to move forward with the application based on, the initial application review.
Awesome. Thank you, Sharon. And I have one last question. This is more like a personal question. This is for Phil again. Phil, sorry, I'm picking on you today. But my last property that I bought was in 2018. I managed to negotiate the closing costs with the seller. So as a buyer, I was able to negotiate a little bit on that. We actually went 50-50. Fast forward 2 years, 2020, in the middle of the pandemic, actually 2021, I'm sorry. I still have PTSD from it, just so you know, but I decided to go back in the market because I wanted to look at another property. And I talked to my realtor, who was my realtor back then at that time, and I asked, hey, can I negotiate closing costs? And she laughed at me. She said, you're crazy, you're nuts. Not going to happen. I know it's been about 3 years now, but how is that going on right now, Phil, with the closing costs? Is that something that you guys are able to negotiate now, as helping somebody that is buying?
Well, I hate to say this to you in the first place, and that is, unfortunately, the realtor you used X number of years ago was wrong. Everything is always negotiable. There is never anything that is not negotiable. It's just a function of how a deal can be structured. So you might have to pay a higher sales price to get those closing costs thrown into your contract. But basically what you're doing is you're basically financing those closing costs as opposed to having to cough up the money up front. So it creates a better cash flow situation for you as a buyer. But again, everything is always negotiable. It's a function of explaining things to, whether my client is the seller or my client is the buyer. I'm going to explain the situation, say, this is why they're doing this. This is what they need. This is what they want. What do you need? And this is how it affects you. And it's just, again, having negotiated contracts now for well over 35 years, that's scary. It's understanding, where everybody's wants, needs, and desires are, and being able to work those out. Everything's negotiable.
Thank you, Phil. Thank you. And again, this is the reason why you go to somebody. You go to somebody like Phil to make sure you have the right person in your corner, especially if you're a first-time home buyer. Boy, you trust me, you really want to have somebody there that's going to help you and guide you through the whole process. So thank you, Phil. And with that being said, I don't believe we have any more questions. So I want to take this time again to thank Kelly, Angie, Sharon, obviously Phil again for coming in and joining us on this exciting webinar. I know it was very informative, very interactive. So many great questions that came in. I think we all learned something new today. So thank you for all you do. Truly appreciate you. And most important, for staying a little late with us. I know we went 11 minutes past our scheduled time, but this is our commitment, like we say, right, Eddie? We'll not leave you until we answer every question. So thank you all again. But before I let everyone go, I obviously want to invite everyone again to our next week's webinar. We're going to get back to one of our most popular topics that we always talk here at least once a month, and that's going to be on fraud and identity theft. So we have that webinar for next week. It's going to be behind the scenes of identity theft. So how your data gets stolen. So if you have anyone, if you enjoy this type of webinars, please tell them to come in. They don't have to be a member, and hopefully they can get some information they can share amongst their peers, and then they take something from us here. So again, thank you all for coming on board. We will send this presentation to everyone. I think I saw that something in the chat. We will send a presentation along with all the contact information for Phil, for Sharon, Kelly, as well. So if you wanna reach out to them, you will have a point of contact for them. Right, Carrie? Correct me if I'm wrong.
Yes, I'll send it out tomorrow. If the recording's ready at that time, I'll send it too. Otherwise, it'll be on our website by Friday.
Awesome. Thank you again, Eddie, Andrea, and Carrie. We'll see you guys on the next time.